Been a long time that I did a live show on YouTube, I think. Um, let's dive right into it. The title of my live show here is that I'm 130% invested, which is 80% in crypto, 40% in stocks, growth stocks, and then 10% commodities. That has changed quite a lot compared to before. If you remember, before I was also leveraged, and of course I have a loan also of 30% negative. Huh? That's how I can be invested for 130%. But before, actually, I had no commodity exposure. I had a negative commodity exposure. I was short commodities, short gold, usually for around 20%. Later, I had some other shorts on other commodities like um, on coal. I had a short, and I also had puts on commodities. I was short the futures market in coal, but also had puts on different commodities. In the beginning, it was lots of GLD gold, but later it changed into other ones. Um, but yeah, I cancelled all that, realizing that I was really wrong um, with that trade. Um, that's not to say that commodities cannot go further down. That's certainly possible. But it was really the wrong trade for me, because the purpose of the trade was to be invest in something that's not correlated to my other investments at the time. A year ago, that was mainly crypto. I wanted some other investments, and I borrowed against my crypto, and I invested mainly in shorting commodities, shorting gold, which was really wrong because it was directly correlated. As crypto collapsed the past year, actually commodities went up. I expected them to go down during the COVID boom. Crypto went up, stocks went up, but also commodities went up. And my thesis was commodities are supposed to, like, they're only going up not because of a structural shortage, but because of a temporary shortage due to supply constraints, red tape, or temporary over demand. But there is no fundamental shortage of commodities, and therefore commodity price will come down, was my thesis. However, I totally overlooked that crypto will likely also go down a lot, and so do stocks. Like, I totally overlooked that um, that uh, that um, that stocks were seriously overvalued. Not only the ridiculous stocks. There, I was also talking about all this retail hype of absolutely ridiculous companies being pumped into ridiculous valuations. There, that I saw. But what I didn't see was that my own preferred cryptos were also seriously overvalued for the time where we were, which was 2021. They were not supposed to be at $3 trillion valuation. That was actually, I had predicted myself after the bear market in 2018-19 that it would take till 2023 for a new bull market to find its top, and it was already happening in 2021, way too early. But I had lost really. Yeah, I had lost. I just was not. I was not doing a good job. So, but okay, the crypto went down, but then my shorts on commodities also went down a lot because crypto started to go down and stocks at the end of 2021. But commodities actually continue to go up. Huh? I had expected, predicted, as COVID um, stops and all the red tape around COVID and supply constraints, that the price of commodities would come down. But what happened next was a war in Russia started, and commodity price went up the first 3 months of 2022 a lot. And so me being short on commodities lost a ton in my shorts on commodities. What I should have had was not only okay, I could be investing in crypto, but I should have had other non-correlated investments, and actually being long commodities would be one, actually not even non-correlated, but even inversely correlated. I'm the one explaining already for so many years that actually the inversion to stocks is commodities. It's not bonds, it's commodities. If you look at the long-term cycles, either stocks do well or commodities do well. Huh? But it's only one of them. They never go up together. Huh? Only temporary. But if over the long term, in 10 year duration, 5 year duration, they never go up together. It's only one that goes up, the other one not. So if you want to have a non-correlated investments or even inversely correlated investments, you should have always some commodities or some stocks in a portfolio. Always a combination of both because they are inversely correlated. However, what I said at the time was that I don't want to be long commodities. I don't believe commodities are right investments. I don't want inversely correlated investments because those are actually working against each other and they take down the performance of your portfolio. But but and I wanted just other different investments that are also good investments but that are not correlated to my to each other. But I should not have chosen a short on commodities then. That was really wrong because it is actually the same kind of investment as being long stocks is the same as being short commodities. And also crypto and stocks are directly correlated. Long crypto is the same as long stocks. So I was like long stocks, long crypto and short commodities as all directly correlated. And that was really my downfall the past year that caused me to lose 95%. So it was really bad. So that's why I've like faced that and restructured my portfolio. Got rid of the short on commodities. Didn't really make money on that also, even though the past 3 months commodities went down somewhat again. Yeah, I just played that badly and even then I didn't make money on that. Is yeah, bad performance. So let me but so I have now a 10% exposure on commodities is uranium, because I still am of the opinion actually that commodities, I don't believe we have started the commodity cycle. I still believe it's likely we're in a stock cycle for the next 10 years and not a commodity cycle. um, and and therefore I don't think actually a commodity is the right investment. But if you have to force me to pick one, I will take uranium because that's one commodity that has been severely neglected and undervalued and unrealistically so, and now it's becoming clear for the world that was ridiculous, and even the most even the Greens are these days changing their mind on uranium and start to recognize it's actually a valuable energy source and they should not shut down these reactors but instead keep them open and build some more even. So I think that may put an upward pressure in uranium despite commodities overall still being in a bear market. So that's why I took a 10% on commodities. Um, um, but okay, that's really neglect. Like I really have to study that more, and preferably I would like to have some kind of it's very difficult to find non-correlated investments. If you could tell me which investments, yeah, there's one thing that I also did so wrong, huh? Like when I was a year ago long, I was very heavily exposed to crypto and stocks, and I went short commodities as a hedge. But what I should have done was going short bonds, huh? I talked about that. I even took a small position, but too small. It didn't make a difference. But that was the right move. That was the right, actually non-correlated, even a different kind of bet that could work out. Even if my crypto investments don't work out, short bonds could have worked out, and it worked out fantastically. But my exposure was way too small, and so that I also fucked up. Um, so yeah. Um, let's take a look at the questions. Feel free to ask anything. Also, non-investment. You can ask about any topic. Thank you so much for joining. 22 people. Philip Brown, thank you so for your first comment. Mark, how can you be so aggressive in your investments? I have been 70% cash now for over a year and still expect further decline due to China, Taiwan, and Russia, Ukraine, says Philip Brown. Um, um, uh, Okay, the I really don't think right now is the right time to be cash. A year ago, yes, many indicators, market was overvalued, different markets were overvalued, but today you can't say that. On average, you shouldn't be investing cash. If you look at the average market, you should not be investing in cash. It's a bad investment. But you can make some exceptions for it. But cash usually loses like 4%, 5% after inflation. Even if you get 5% interest, that means you have 10% inflation. You always lose 5% per year. So, but there are times when cash is a good investment. But those are exceptional times. Like it's 1 year or 2 years every 10 years that you could say, okay, you're much better off in cash when market's correct. But otherwise you should be either in stocks or commodities, huh? And but it's very hard to predict when are those years that you should be better off in cash. But if you just had a year where you were much better off in cash, huh, then likely that's not going to be the next year. Huh? Very likely, if you just had a year where cash was a tremendous, the best investment, huh? A lot better than stocks, a lot better than crypto, and even a lot better than bonds. Okay, yeah, that means that was the best investment. Yeah, well, congratulations, you did very well. But very likely that's not going to repeat the next year. It's actually the inverse. Reversion to the mean is a very you can count on that in the markets. That's one thing that, of course, it always goes more than you expect, but I mean, this kind of losses are historical. We already have historical losses if you look at an average investor, his portfolio, because bonds also went down so much, which is unique. Like that didn't happen in 50 years. The average investor has made losses worse than the 2008 financial crisis. How often does that happen? It's extremely rare. And so everybody values cash today. Everybody says, I wish I had more cash a year ago. And that's very likely not the right time to actually be in cash then. So I would say that uh, from a risk reward perspective, cash is probably a very bad investment right now. Much worse than the average. On average, you could say, okay, since there's one chance in 10, or maybe two chances in 10 that you're gonna have a year of or where both stocks and commodities do poorly, and cash is the best year, you could say like, okay, on average you should have 10-20% cash. Yeah, okay, that's true. But if you just had such a year, a 1 in 50 year event where cash was outperformed tremendously, then that means that you probably should have zero cash. Actually, you should have be negative cash probably right now, from a risk reward perspective. Um, so that's my answer, Philip Brown. Of course, there are lots of global and macro risks. War can continue to escalate, but and China, Taiwan, but we're already in a war. So that's priced in. Yes, it can get worse, but I mean, people already fear nuclear war right now, and that's something that's shared, discussed in the broad media. Um, so yeah, uh, yeah. Is it not safer to just wait until globalization sorts itself out? Says Philip Brown as a second comment. Um, as an investor, you don't have the luxury to wait till the coast is clear, until everybody is till the risks are gone to invest. Then also the reward is gone as well. The maximum, the best time to invest is when the perceived risks are very high. That's usually, when that is also priced in, and I believe that's to be the case today. Tom Seed, looking good, buddy. Thank you so much, Tom Seed. Hi, Ryan Giffen. Hi, Monero XMR. I hope you and your family are safe. Yes, they are. Thank you so much, Monero. Um, Someone says shared on Noise app. Noise, I'm an investor in Noise dot cash, but they also have a new app now. It works quite different. It's an invitation only. It's just called Noise, it's without the dot cash. So yeah, check it out. The founder Simon believes that's a much better model to make a successful social network. Invitation only, and it's also done in such a way that bots don't have a chance, and that the best content is visible. Because Noise.cash had lots of people that are there just for the money, making stupid comments. There was lots of work to get rid of that, and now he has a different setup. So yeah, it may work better. Ryan Giffen, do you think BCH getting legal tender status in St. Kitts will have a positive impact on crypto ranking? I think this makes for an interesting news item if that something like this happens. Um, but what really drives fundamentally a company and a currency is real adoption. And I don't I explained in my previous live show that I became a lot more negative and skeptical when it comes to Bitcoin Cash and real adoption. um, yeah, I really don't believe brick and mortar merchant adoption is the future for a cryptocurrency. Because fiat base does it equally well. There are no advantages to use crypto there. And so what you see is that, yeah, you can quickly get 20 merchants in any city to adopt Bitcoin Cash, but what you cannot get is enough users, huh? Even for one of them. Huh? Even if there are a bunch of crypto funds frequenting that place, it's not enough turnaround for that merchant to continue to adopt cryptocurrency. Typically, there are only a few people that use that, and employees they change every other year, and you have to educate them again. You have to have a special payment terminal there, even if it's just a tablet. It needs to be kept up to date. Like, typically only the boss himself knows how it works then, and like it's just not working. Brick and mortar adoption for crypto, this is a tried model. Roger Ver is a big fan of that, still pushing for that, but I really think it's proven to not be the right way to make success of cryptocurrency. And and I don't have my hopes in that anymore. I believe that a cryptocurrency will only find real adoption when it offers something better than what fiat currencies offer, and that's not just about inflation, limited supply. That's not sufficient. You need real adoption, user adoption. And why would people use cryptocurrency? Yeah, to save money. Yeah, but Bitcoin BTC took that store of value. Sure, you can just use it for that. Yes, but that's also not even sufficient. What you really need is new applications that you can't do with fiat. And for example, Monero has that because it's a private cryptocurrency. While that's also in the dark market, the currency that you need now, and that's preferred there. And so that's real adoption, because you cannot do it with fiat. You really need a cryptocurrency, and you need a cryptocurrency that offers the best privacy. And so you really need it, and so it has real adoption, and you can see that in the amount of transaction. Monero that's growing better than Bitcoin Cash, the price also growing better than Bitcoin Cash. So they found themselves a niche. Ethereum also with DeFi, especially decentralized finance, allows you to take loans or to lend your money or to borrow money using cryptocurrency in a decentralized fashion without counterparty risk. That's innovative. That you cannot do with fiat. So that also causes real adoption. So, but Bitcoin Cash hasn't found it yet, and that means it's just like investing in a company that didn't find its product market fit. It's a lot more risky, and likely it won't find it. You have to assume that 9 in 10 companies they fail. The risk go down a lot when they have actually something that's successful, like they have some kind of product or service that's wanted by the people, used by the people. People are willing to pay for that. Okay, then you have something. But as long as just basically ideas in the idea phase, then there's lots of risk. So I think that's the case for Bitcoin Cash. So I've lowered my exposure to Bitcoin Cash. I'm only 20% exposed to Bitcoin Cash. I'm 30% exposed to Ethereum and 30% to DPI, decentralized finance, different protocols. Because of the risk reward and the way I look at it. Of course, I have to admit, like, probably bad timing here. Bitcoin Cash went down a lot more than Ethereum. It's still actually likely Bitcoin Cash will outperform Ethereum over the next 6 months, when if indeed the bull market starts. Or even if we simply have a rebound, because crypto went to 3 trillion, dropped to 1 trillion. I mean, even if we're not out of the bear market, we can easily go to 1.5 trillion, 1.8 trillion before we go to half a trillion. We can have just a rebound. Also, during that rebound, I think Bitcoin Cash likely will outperform. But for me, I'm quite impatient, and when it comes to these things. I don't like to invest in something that I believe that in the long term is not so good, even if it's in short term looks actually quite good or better. If the long term perspective is not so good, I found the risk too high, and so that's why I did it probably a little bit too early. When do you leave Kenya? I left Kenya a year ago. I didn't feel safe there anymore after the police started harassing me and arresting me and my family, and accusing me of all kind of things. Then yeah, I left the country quickly thereafter. Um, mm, Hi LA Matvich, long time no see. Minus 95%, did I hear that correctly? That's right, RF Noob. I had my biggest loss ever. I lost twice 80%. That was also really bad. Once in 2013, no, 2014 I lost 80%, and also in 2018, no, 2019 I also lost 80%. I said never ever again. But I succeeded in doing even worse. The past year I lost 95, which is a lot more than 80, because after you lose 80 you need to be cut by half again, and then you're at 90, and to go to 95 you need to be cut by half again. So it's really bad. Yeah, I certainly learned a little lesson. Monero says, Mark, last bear market you tried to time the market to catch the bottom. Are you doing the same thing this bear market, and do you think we are near the bottom? Yeah, so actually I did pretty well investing during the bear markets, and timing the bottom. In both previous cycles I was 80% invested in crypto at the bottom, continuing to increase it as we went lower, and that paid off very well as the bull market started again. Today I'm again 80% invested in crypto. So yeah, I believe I got that right, very likely, and we have seen the bottom of crypto at 800 billion 3 months ago it was. Already. Time flies. But yeah, I think the bottom is holding well, and BTC went to 18 or 17k, and it has not it has been, it's really a slow bottoming out process, where it stayed around 20k for 3 months. Ethereum a little bit different, because it's like the most performing and much more volatile. I went to a bottom of $800, and yeah, it's already at double that. So yeah, I think that we saw the bottom. Yeah, I think that's likely, even though there are some indicators for the stock market that it's not likely. The VIX index jumps out, where we have not seen a reading above 40 or 45, which typically is the case when there's a bottom. But there are many other indicators that do signal that the bottom is in, and therefore and I'm going to go with that. Especially sentiment is so negative. that sentiment indicators that yeah, I take precedent over that than over the VIX index. Mm, so yeah. Tatiana, what's your advice on someone who's new in cryptocurrency trading? Is that I would recommend not to trade, but just to invest. Buy some coins that are good fundamentals. I think Ethereum is the best risk reward coin at this point in time, because I believe the bull market has started. The biggest coins go up the first because they are lowest. They are perceived to be the lowest risk, BTC and Ethereum, and they will likely gain dominance in the first part of the bull cycle, and the smaller coins and even the medium sized coins, they will not get much sunlight and much attention. First, the market needs to rebuild, and that typically happens with the bigger coins. So I would recommend to invest in not in BTC, but in Ethereum, and start studying the market. But I think that will be a good investment for the next 6 months. Um, Transflowy says BCH will take off over the coming years. It has sound fundamentals, hard money that can be used for peer-to-peer payments. That's unique. Well, actually, almost all cryptocurrencies can be used for peer-to-peer payments, so that's certainly not unique. Huh? But sound fundamentals, I would agree that Bitcoin Cash has been built out very well, especially the decentralized aspect. The business model around this is there's no inflation to fund anything. There's a good team of developers working via donation system, the flip starters. So I think it has good fundamentals, but all these things don't count if you don't have adoption. You really need adoption. Huh? You need products or services that people use, and they really need your currency to use that. And I don't think Bitcoin Cash has found that. David, do you ever think that a safer way of investing without such big swings would be better, considering you have other people that you need to take care of? Now, yes, absolutely, David. I'm a family man now, and having such strong swings in my portfolio is not it's not even responsible. So I agree fully with that, and I will certainly try to avoid that for the future. What I really did so badly every time at the top of the crypto market actually was cashing out. I've been so bad at that, and I've gotten even worse over time. Huh? In the previous tops of the crypto markets, I cashed out maybe 20% or so, and that made a big difference during a bear market. But now I even failed to do that. So that's really my mistake. So my biggest plan is a change in strategy, is to continue to take the Kelly criterion into account as the market moves up, and not wait too long before locking in profits and diversifying them into much more secure but less good investments, such as real estate or things like that give you a lot more security, but of course a lot less growth also. So that's my plan. I hope I get a chance for that. Lejoske, nice to see you, man. Are you planning to leave Kenya permanently after what happened to your family there? For sure, yeah. Hope everything will be sorted out for you and your girlfriend. Yes, of course. Like, I mean, I'm an investor. I need to be able to live safely. To do investing requires lots of daily study of the markets. How can you do that when you're afraid that the police will drop in your kick in your door and drag you to an interrogation room, like for no reason? No, like that's not gonna work for me, and also like I want safety first, huh? So yeah, I used to think that I like emerging markets and countries like Kenya and many such countries that have high growth. It's attractive. You have lots of a vibrant life there, but yeah, you also have corruption. And I used to think that corruption is not that bad because, well, in the West you also need to pay taxes. It's pretty much the same, but it's not really the same actually. The difference is that corruption they will make up, uh, like they will accuse you of make false accusations to extort money from you. Huh? That's a lot less pleasant than the taxman saying you have to pay taxes because you made money. That I know now. So in the West, the police is not motivated to make up false accusations, huh? To squeeze money out of you. Huh? They make enough money themselves, and it would be too risky to do something like that. Huh? It's only when you're engaged in criminal activity yourself that you might be extorted by police. But if you do legit business, you're not gonna get extorted. But that's not the case in countries where you have lots of corruption. Huh? Even if you do legit business, nobody is safe. Huh? If there can be money squeezed out of you, uh, get ready. Huh? Mm. Um, wat is er, jongen? I'm here with my son. He's sleeping. He's waking up, so I'm not gonna call too long anymore. What do you think inflation will do over the next year? Hi, Swordfish. So nice to see so many familiar faces. I think inflation will come down. Um, yeah, actually, that's quite probable. Commodities have already come down, and that will reflect in the CPI. Also, start reflecting in the CPI soon. Same with used car prices, rentals, house prices. It's all coming down, so that will reflect in the CPI. Wat is er, jongen? Huh? Wat is er? The name of the website. Yeah, I follow Game of Trades. Also, I'm doing promotion. If you're interested, I do a cashback of 75% in BCH. If you take a premium subscription to Game of Trades, then you can see the premium content on the website, more videos. On YouTube you have free videos, but you also have extra videos. Huh? And it's really good, especially to get a macro perspective. Wat is er, jongen? Wil jij iets drinken? Huh? Wil je iets drinken? You want to drink something? Huh? You want chocomilk or water? Chocomilk. Shoot some more questions, guys. Can you stop crying? Mikey, why do you cry? Huh? Mikey, wat is er, jongen? I'm calling. Can you not make that noise, please? You want chocomilk? No. Okay, can you stop making that noise? Baby whining and crying. Ay. I'm not the best for that. Hier, pak maar. Ja, drink maar. How to deal with the emotion of losing so much money? It's tough, huh? But I think it's important not to let the fear make you the wrong decision. Typically, you lose a lot of money, you don't want to invest anymore. Um, but you should do the inverse. That's not a problem for me. What is a problem for me, however, is the other way. If you do very well, then you become greedy and you want to invest even more or stay fully invested, and that's wrong. You should scale down your investment and even get out of the market fully, and that's something that I really have failed to do. So yeah. Hi Daniel Willard. Do you think that the Fed and quantitative tightening have a significant effect on the markets now? The macro is in a different environment than previous years. Well, yeah, the Fed has raised interest rates a lot, and that has caused the market to go down and bonds to go down, stocks to go down, crypto to go down. The Fed argues they do that for the inflation that's going up and to get a control on that. But even without the Fed, I believe that interest rates would go down up a lot. Simply because, well, yeah, these are normal cycles that went down for 50 years from 15% to 0%, and then it goes up for 50 or 40 years from 0% back to 15%. That those are the cycles that we likely have, and so so I think it's a normal process, and I don't think rising interest rates cause or negative for the markets. We had rising interest rates also from the 40s till the 80s for 40 years. Interest rates also went up from 2% then to 15% in 40 years. But we had tremendous bull markets there and also bear markets. But that stays intact. Actually, the bull market started was during the first stage of rising interest rate, when it went from in the 40s, 50s, and 60s. It went from around 2% to around 6% interest rates, or 5%. Well, that was a whole long bull market. Stocks went up in the 40s, 50s, and 60s a lot. So I don't think these are, okay, of course it went up a lot in only how much I don't know the time anymore, but it did go up a lot from 1% or half percent to 4%. But yeah, I don't think this will have much further effect on the market, because later down, of course, yeah, mortgage rates went up a lot. That will, of course, have an effect on the house prices. And things become much more expensive, debt become more expensive, but in the immediate term, and that will have an effect on consumer spending. That's still very good now, but very likely that will indeed go down. I do believe it's correct that there will a recession will come, but if you follow the work of Game of Trades, you see that it typically takes 6 months to a year from today before such a recession starts. And what's going to happen until then? What is there, Mikey? What is there? Is the question. I think a strong rebound is likely, and then we'll still have to wait and see what happens with the earnings, because yeah, that depends on how people will spend, and that depends also on inflation. So I think actually, inflation may go down quite a lot, and then consumer spending may actually, despite interest rate went up a lot, they likely will go down a bit. They're now at 4%. They will like go back to 2% maybe in a year, and then okay, that causes also consumer spending to, if inflation goes down, interest rate goes down, allows them actually to continue to spend well, which will be good for earnings. And so what now is very likely going to be a rebound, or at least a relief rally, well, that can turn into in 6 months or a year, can become actually a quite good economy. Maybe there's still a recession, yes, but it's not all that bad actually, and it may have little effect on the stock market, huh? And on the crypto markets, who have found maybe their bottom already half a year before, and who actually continue to go up. So yeah. Tom Seed says, I remember well how you made an absolute killing with your Tesla calls. Do you have any take on Tesla nowadays? Um, I think that Tesla is a great company, but yeah, and it deserved its correction. It went down recently. Tesla bulls are too bullish, I think, even though it's of course the best company there is. But yeah, I mean, you always have to look at valuation also. I think that's actually priced in now. So I don't see opportunity there, but I do agree that I could certainly be wrong there. I mean, if you look at companies like Apple, for example, I mean, they reach their peak a lot later. Like I'm usually way too early in these things, and I can certainly imagine Tesla to continue to be a great investment for the next 5 years. I'm not studying calls and puts these days. I'm just long stocks. I lost so much money that uh, exotic instruments I burned myself badly, and all the money I made on the Tesla calls I lost all again in GLD put options. So yeah, you live, you learn. As an investor, I found that yeah, I'm a slow learner, and I always have to burn myself, and I'm just long now. Stocks. I do use the leverage, that I do, but I think it's actually not that much risk I'm taking by borrowing against my crypto. Um, yeah. William says, why invest 130% using the Calc criterion? Shouldn't you be allocating only 100%? Um, I don't have an answer to that. But if you look at just the individual investments, for example, crypto, if I make my Cali calculation there, yeah, it's indeed only recommended to invest 40% or 50% into crypto. If I do my Cali calculation, and I'm actually at 80%. So I'm way over invested. If you look at the Cali criterion using half Cali, of course, using full Cali, I'm not over invested, but you should not invest full Cali. You should invest half Cali. So I agree, following the Cali criterion, I'm over invested. But I, I'm I think applying the Cali criterion is a lot more important for me when things are going well. Scaling down has been really my challenge, and where I did wrong, and divesting away. There, the Cali criterion can help me a lot, and I hope that happens once the markets recover and everybody becomes positive again, and I'm making money again. Like that's where I want to apply the Cali criterion. But today I want to be very greedy, overly greedy, because the market is overly fearful, and indeed just invest to the max. This is the max that I can get against my crypto, the max loan that I can get. My my liquidation price is only 15% below current market price. That's risky, you can say. Yes, but when the market goes down again, yeah, I have to liquidate and I have to pay off loan, and I lose, for example, Ethereum here, because I use Ethereum DPI as collateral. Yes, but as the market goes back up, you can do the same again. I've discovered that when you use this kind of leverage, you borrow against your capital. it works both ways. It's not because you get liquidated, huh? That's the end of the story. No, of course you want to avoid that, but when it happens, you get liquidated. Huh? When you're not leveraged, you just the value of your assets goes down. Huh? When you're leveraged, what happens is because you have loans, you need to pay them off. Not only does the value of your assets go down, but the amount of assets you have also goes down. Huh? So you have more losses. That's true. But the other way up is the same. As the market goes back up, when you're not leveraged, the value of your assets go up. That's nice. But when you're leveraged, the amount of assets that you have also goes up because you borrow more and more and more against your assets because your assets going up, and so the amount of assets that you have also goes up. Huh? So it works like that. Huh? And so the losses you make are a lot more on the way down, but the profits you make are a lot more on the way up also. Huh? And so that's what I'm applying. And I believe that to be the right strategy right now because the cost of capital is very low. I only pay 2%, 3% to borrow money. Huh? Why are people lending me USDT at 2% or 3%? Huh? As if there is no opportunity in the market, huh? As if inflation is it's 0%. No, people are not being very smart to borrow me their money for 2%, 3%. It's really nice of them, huh? And I don't want to like refuse that offer. Huh? I want to squeeze that to the max, huh? And that's how I'm able to with a portfolio of how much is it? 60% Ethereum DPI. I can borrow about half of that against and about 30% I can therefore borrow and invest and I do that. Huh? Um, I believe that's the opportunity right now. Huh? But I fully agree, William, that I'm not following the Kelly criterion here, and that's a very good critique. And I agree, using Kelly criterion should avoid you from losing 85% of your money. That's not really true because actually, even if you do half Kelly, volatility is very high, and drawdowns are very high. But if you apply Kelly criterion also on the way up, when times are good, then you should have a lot less drawdowns. So there I agree. What's the optimal way to manage a harem relationship? A polygamous relationship, a polyamorous relationship, as I have. What's the optimal way to manage it? It's not easy. I've learned the hard way. Double the amount of women is double the amount of problems. I thought that's not the case. As you have children, you have double the amount of children, they can play with each other. Huh? Actually, it solves the problem. Otherwise, you have to play with them. But if you have like a few children, they can play with each other. It's nice. Huh? So that's a wise thing to do. I thought the same applies to women, but it's not the case. They don't play with each other. You have to really put them together, and then they don't easily play with each other. So yeah. I think I might have underestimated a little bit polygamous or polyamorous relationship. Um, I really don't. I'm not the man with answers there, but more questions actually. So I'm not really the guy to ask advice to. So that's it. My Tesla is charged. Huh? Enjoying very much driving Tesla these days. It's really cool, unbelievable. In half an hour, I have 400 or no, 50 minutes. I'm from 0 to 440 kilometers. I can drive now. And these cars, I'm in the Model 3, which is the cheapest one. It's unbelievable. These are really race cars. Huh? Like I drove in a McLaren. Such a good car. I was just thinking, like the best car that I ever drove was a McLaren 720p, a race machine. Huh? A very very cool. Like it's so stuck to the road. It pulls up very fast, brakes very fast. It in the corners, it's like really stuck to the road. Um, and yeah, that one even was convertible, roof off, very nice. But this comes close, huh? In driving experience, it pulls up very fast also, and it's good in the corners. Um, of course, the roof can't go off, but it's really beautiful what Tesla has achieved. These cars are amazing. And they say the thing that people typically say, oh, how long does it take to charge, and do you have to charge a lot? That's not true, huh? It's like your phone. You come home, you plug it in, it's charged, huh? That you do the same with the car, huh? And then when you're on the road with these Tesla superchargers, that you go anywhere you drive, you find these. You just have to stop half an hour, and half of it is back full, and you wait an hour, and it's totally filled up again. So these it's amazing, huh, what they've built. You don't need any cards. You just drive up to it and you put that thing in. You never need any cards for it. Huh? It always works. And automatically you put in the GPS where you're going, and it will automatically have you stop at superchargers if you don't have enough battery. Very beautiful. I recommend buying that. Also, valuation, these are the only cars that preserve their value so well. After 5 years, you want to sell them. They have preserved their value a lot better than the typical gasoline car. A lot better. The only thing that wears down is the battery, and not that much even. And after 10 years, you can put in a new battery, and the car is as new. Also, they did that very well, is the design of the cars. If you look at the Model S, that design is 10 years old, but that car still looks modern. It doesn't look old. So you just put a new battery in, that car is a very, very good car still. So it's a good, is it an investment? You could say it's an investment. A car is a big ticket item, and this one presents value. I don't buy them, I just rent them, because as an investor, you have to count, of course, the also the cost of opportunity. If you put money in a car, you can't put it in the market. And what your opportunity cost depends on your returns. In my case, it's a 20% per year. Compound annual growth rate, it's not as good as before, but it's still decent. And if you count that in, then you're better off renting a car, even if it preserves, even if it doesn't go down in value, you're better off renting it than buying it, because you don't lose a 20% return opportunity cost. Mm, uh, so yeah. Hi Mark, have you looked at the currencies like Turkish lira, Chinese yuan, Hungarian forint, Polish zloty? Says Palatina. Works. No, I have not, but I know that Turkish lira has dropped a lot. Um, yeah, there are many of these programs, investment programs, and those are very interesting. Um, but yeah, currencies, fiat currencies, I don't think are interesting. Um, no, no, I don't invest in these things or trade in these things. Um, Crypto texty. It's always interesting to hear you speak about women and cars. Thank you so much, man. And how are you? I think you're in Ukraine, right? How's life? Um, yes, hi Ryan Giffen. Yes, I did not buy a Tesla, but I did order a Tesla some time ago. That's the supercar, the Tesla supercar. Um, but yeah, they're not making them yet. Maybe next year in 2023. They started taking orders in 2017, huh? For the Tesla. What's the name again? And they started taking deposits for that car, but they've still not made it. But that's the one car that I did buy, but it's not delivered yet. But I think in 2023 now, Tesla is starting to make also the truck, the semi truck. That means that they have lots of battery capacity, and you can see indeed that um, demand has gone down somewhat, and so they are not really they don't have a shortage in batteries anymore, and that allows them to make these kind of cars that are very high battery requirements, such as the semi truck, but probably also that supercar has also lots of battery demands. You will be able to drive 1,000 kilometers with that one on one battery charge. Huh? But that's of course if you drive slowly. Huh? That car will pull up in 2 seconds and possibly even has 200 kilometers, which is tremendously fast. But will also have an extra booster package using air pressure to even do something more crazy and do it in 1 second or 1.5 seconds, which is absolutely stunning. Buridan Crypto. Hi Mark, good to see you again more frequently. What do you think about meme coins? I despised them in the past, but I think they will pump the most because they will onboard most retail, like Doge and SHIB and Dogechain. That's certainly possible. Elon Musk is a big fan of Dogecoin, and I would not underestimate Elon Musk. So, but yeah, not my thing. But Dogecoin, I saw the previous top. Actually, 16-year-old girls were buying that, and that's the only crypto that succeeded in that. So I agree with you that these coins are very good at attracting new users. Yeah, the Roadster, that's the name of the model, Roadster. They are likely to appreciate a lot upon delivery. That's what I think. Also, they asked $250,000 for a model for a Roadster founder model. Huh? And if you buy the normal model, you only pay 50,000. But if you buy the founder model, you pay 250,000, and they would only make thousands of those. I'm not sure they're still taking orders of that. If somebody knows, let me know, because they've taken it off their website, but you can actually still order them. I heard it's just a little bit more complicated, or it's more you have to sign in first or something, but or you have to do it via the phone. I don't know exactly, but they still taking orders. I heard so. But is that for the founder also, or only for the base model? I don't know. But I also talked about this car before, and I think it will go up a lot in value the moment they decide to make it. Because when they decide to produce it, it probably only 6 months and they have them. And then they will come on the market. They will be the fastest car by far. And I expect indeed that in the first series, like that, they will be sold for a lot more. You pay 250, you can sell it maybe for 500,000 or 1 million to the ones that really want the first ones. Huh? But okay, yeah. What will happen after? I'm not sure. Because founder models in the past never actually received a premium. And so, yeah, track record is very important in these things, and there is no track record really. The Roadster, actually, that's how Tesla started also 10 years ago with the Roadster. Also had founder models, but they actually never really gotten a premium price over the base models. It all depends, I believe. I think, yeah, so I don't have too high hopes for it, but I do believe that they are good investments. But of course, that's not counting in all the years of lost opportunity and inflation, and you have to count that also. And from that perspective, I mean, if you have invested in 2017 in such a thing, and 5 years later you don't have the car yet, that's a lot of lost opportunity. Huh? I invested in it last year. Um, Actually, I should have just converted my whole portfolio to these cars, because it was a much better investment than my my crypto. But of course, hindsight is 2020. Huh? I'm gonna end the call, guys. Thanks so much for joining, and I wish you all good luck in the markets. Thanks you so much. I really appreciated seeing so many familiar faces again. That's really cool. See ya.